Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. I've lost count of the number of times I've heard the words fiscal cliff over the last 6 months, and in fact I might have even mentioned it now and then myself. It was the fear that when government support like JobKeeper was wound back, businesses that had been relying on it would suddenly collapse, triggering a wave of job losses and insolvencies. So far, it hasn't happened. We're yet to see official labour force data for April after JobKeeper was removed at the end of March, but JobAds data suggests we might be okay. And as for insolvencies, well, the cliff seems to have disappeared or at least become more of a slope. Scott Langdon is a partner in Restructuring at KordaMentha. Scott, welcome back to Fear and Greed.
Thanks, Sean. Happy to be here, mate.
There doesn't appear to be an insolvency cliff. Is that right?
Yeah, no, I completely agree. I don't think there is an insolvency cliff coming anytime soon, and I don't think it's been coming for a long period of time. I think if we take ourselves back to, the start of 2020, January and February, when the perception of the COVID pandemic coming, it got us all very concerned and concerned for the future that we could have mass ramifications that we haven't seen since wartime. But when the federal government implemented JobKeeper and JobSeeker, plus various other support mechanisms, I think the concern of an insolvency cliff evaporated really quickly. And the businesses I spoke to throughout 2020 was that once the support packages were there from the federal government, companies then went from fear and concern and crisis to, right, how do I make the most of this opportunity? How do I, we're going to hibernate, we're going to shrink for a period of time. And the entrepreneurial spirit of Australian business really came out. And I think that whilst there was still high levels of stress, companies were looking inside their business to see what they could do differently and actually quite excited about what the future looked like. And yes, at an employee level, when you're one removed from actually what's happening at a board level or a management level, yes, there's concern and anxiety from the employee and their family. But from the organisation, the Australian spirit of how we're going to come through this really came out. And I think from the middle of last year, when I was dealing with hotel groups, retail groups, developers, builders, there was a real sense of steel that this is an opportunity to reshape our business and come out the other side. And now hopefully we are at the back end of the pandemic. The stimulus packages are coming off a little bit. And I think businesses are broadly in really good shape. I think that there is no insolvency cliff coming anytime soon. And I think it's great for the economy, it's great for employees, and it's great for families.
Okay, so that's broadly across the economy, but there must be some sector. I mean, you mentioned builders. They've had some great help from the federal government, and that has pushed out work for months and months because of the lead times. But then other areas, I suppose travel and tourism are the obvious ones, they still must be struggling a bit, particularly the recent federal budget said that international travel, for example, won't be back up and running till at least 2022 and probably not till mid-22. So there must be some sectors that are struggling.
But that's the brilliance of business as well, though. That yes, tourism, and I've previously spoken on this platform around the challenges of tourism that were experienced last year. But the recent data coming out of Far North Queensland and Queensland generally is that they're having one of the best periods they've ever had before, that the way our business dynamics works, we're all holidaying in Queensland, we're going to Cairns, we're going to the Gold Coast, going to Noosa, and the tourism industry up there is really quite strong and they've bounced back, and you need to book weeks in advance to get a restaurant booking. So tourism's held up pretty well. I think the areas of still concern are airline and airline related industries with the opening and closing of the borders, that state borders I talked to, the anxiety around whether people are willing to fly or not. I think the airline industry is an area of great concern that still has a lot to go into the future. But I think broadly speaking, the economy's held up pretty well. But I think the airline industry and the flow on businesses to the airline industry is probably where I think the immediate most concern is.
You mentioned the Gold Coast. I've been to the Gold Coast once in the last 3 years, and this year, 2021, already I've booked to be going 3 times. So I totally identify with what you're saying there. One thing that consumers did during the pandemic was tighten their belts, and so the savings rate went through the roof. And the government is now, and Reserve Bank are now thinking about, whether people will just take those savings and plonk it on their mortgage, increasing their wealth effectively, or whether they'll spend it. In the case of business, I suppose it's not so much saving money, but it's more just becoming a lot more efficient or something. Is that how it worked?
Yeah, absolutely. I think businesses, we go into crisis mode once the pandemic hit and we thought, all right, what can I control? And I can control what's in my bank account. And I think businesses in Australia have done that unbelievably well. I think that also with the federal government's implementation of having no risk of insolvent trading in 2020 also provided huge amounts of confidence to businesses to shrink and to look at how they're going to deal with their working capital and cash balances. So businesses aggressively went to negotiate with landlords, with creditors, with the ATO, with financial institutions to agree payment terms and payment plans over a sustained period of time. And the initial reaction is, well, does that put the business at risk? Does that put the landlord at risk? But I look at it slightly differently and to say their interests are completely and utterly aligned. If the business succeeds by paying the ATO off over a longer period of time, not only does the ATO get their arrears paid, they also get tax revenue into the future. Similarly, the landlord-tenant relationship, that if they can find something that's mutually acceptable to each other, which, broadly speaking, people have found, is that they get their arrears paid and then they have a tenant into the future, which therefore makes the landlord have ongoing recurring income and also that values their underlying property even higher. So there's absolutely an alignment of objectives between creditor and debtor. And through this period, we've seen it play out. So the concept and the perception of a adversarial relationship between landlord, tenant, ATO company, I just don't think it's there. And I think broadly speaking, everybody has gone in with the right spirit of trying to find a way forward. There's always the exception, but broadly speaking, the relationship, I think, could have only been enhanced through the 2020 pandemic.
Stay with me, Scott. We'll be back in a minute. My guest this morning is Scott Langdon, partner in restructuring at KordaMentha. So do you think that these changes that came into play, particularly with the tax office and landlords, is something that will evolve over time and potentially change the relationships between business and those two groups for the longer term?
Yeah, I think so. And I think we've seen some really interesting, like we've seen landlords say to the tenant, do you know what? I know you can't pay your whole arrears out. Why don't I take a 20% interest in your business? And so we'll reduce your rent income. We'll change the relationship we have in terms of our lease arrangement. But, now we're completely and utterly aligned for future success. That's something that wouldn't have happened pre-pandemic. In terms of the ATO, I feel like they're more agile than they've ever been before. At the moment, if you've got an arrears to the ATO for less than $100,000, you can jump online and agree a payment plan online without ever speaking to somebody at the ATO. I reckon that's stunning. Like, it's great for business and it's great for the ATO. And it's something, again, we wouldn't have seen without the call to action, which was the pandemic.
I suppose in your area of expertise, though, businesses still need to be careful that they use those services wisely.
Absolutely. And as we come out of hibernation, we actually experience says that there's more insolvencies in a booming market than a contracting market, which seems counterintuitive, but that's what experience suggests. So there are plenty of challenges as they come out of the hibernation period, and you're going to grow your revenue and grow hopefully your cash balances and your relationships. So during that growth phase, we would encourage, especially while you've got payment plans out there, to have a safe harbour advisor, something that's been implemented in the last couple of years through the federal government. And that safe harbour advisor can make sure you're doing the right things at the right time and that you've got a plan that's executable. Because technically, if you're in a payment plan with creditors and that you do go insolvent at a later time, your abilities to pay your debts as and when they fall due, if you're on a payment plan, you could be perceived to be trading whilst insolvent. Yes, so it is a challenging terrain and there are some challenges ahead, but businesses I would encourage to get a safe harbour advisor as we wind down these payment plans, but also I'd get an independent advisor to say, you know what, I'm a business expert of companies coming out of financial stress. Here are some of the challenges that you'll experience, and here's how people have overcome them in the past. Being brave enough to get that external advice will be a really key piece for organisations coming out of hibernation.
Of course, the other people in the puzzle are the banks and the financiers. They pretty much acted as shock absorbers for the economy last year. How do you make of how they treated customers, I suppose, over the last 12 months, business customers?
Yeah, I think the banks have performed really well over the last 12 months, and I think that as a nation we should be pretty thankful and proud of the way they behaved and the way they responded to the pandemic. But also the banks were benefited by the federal government's intervention. They managed to, by removing the burning deck that was this pandemic by the various government plans in place, the banks also managed to get time, and time enabled them to put plans in place to respond to the pandemic. So some of the things the banks did was that they geared up their teams who deal with underperforming borrowers. So they got more staff and diverted them into their workout teams. But importantly, not only did they get staff, they got the right staff. They got staff with experience who have gone through financial crisis before. And so that gave them the grey matter to be able to respond. They also provided more time to borrowers so that the borrower can think through what the appropriate plan is for them. And by having more resources, they can have better conversations with borrowers. And I think borrowers broadly would say they got bespoke solutions from the bank. And whilst I'm sure some of the community might say the banks could have done more, what we've got in front of us will not be a bank-led insolvency wave. GFC, it would be argued that it was a bank-led insolvency which led to a huge amount of insolvencies during the GFC. This will not be a bank-led insolvency wave at all, which is a very, very important differentiator, which is one of the reasons why I don't think we're going to see a wave of insolvencies.
Okay, so the banks, in a sense, learnt their lesson from 2007, 8, 9.
They probably learnt their lesson, and just like I think all business has learnt their lesson from the GFC. But I think the federal government with JobKeeper, JobSeeker provided banks with a period of time to put a plan in place to then execute to their borrowers to look after their interests.
Okay. Now, the moratorium on prosecutions for trading while insolvent, where's that up to? Is that still in place or has that been dropped?
That's now been removed, but we still have the safe harbour provisions out there, and the safe harbour advisor can help organisations through unwinding their payment plans. So technically, if you cannot pay your debts as and when you fall due, you are insolvent. But if you have a plan to repay and a plan to restructure with a safe harbour advisor, that risk of insolvent trading has evaporated.
We'll be back with more in a moment. I'm talking to Scott Langdon, partner in restructuring at KordaMentha. So the next 12 months, what are you seeing as the main challenges for businesses? Not necessarily in terms of, how many we're going to see going into insolvency, but what are the key things that business managers should be thinking about as they look into 2021, 2022?
I think that the biggest challenge for businesses relate to how the companies come out of hibernation and how the shareholders and the directors of an organisation, the people who have got a stewardship of the business, manage their business out of hibernation. And that's a really big challenge because there are many different paths you can take out of hibernation, and all directors and shareholders come from their own frame of reference and their own experiences. And so both ideas or many ideas could be good, but how do we get board alignment and shareholder alignment as to how we come through the other side? And already we've seen this year in my organisation that there are plenty of challenges of getting the board alignment. And this is where we think that the biggest risk of insolvency will be a lack of agreement and then ultimately a lack of decision making, or everyone's pushing hard behind the strategy. So getting boardroom alignment and shareholder alignment is the number one challenge for businesses right now in my mind, because these are really important decisions that organisations need to make. How are we going to come out and rebuild our business? We broadly understand where we're going, but now it's actually into the execution phase. So during the execution phase, how does that look? And I could only stress to organisations that get external people in who do this on a day-to-day basis, because they can provide some clarity of thought. They can provide some clear air as to independent thought on how to come through. And ironically, we want boards that are diverse. We want boards who have diversity of thinking, who can challenge each other. So in the normal operation, having a board structure, a board construct with different MOs is generally the best thing you can do. And we still believe that. I still believe that's very important. But now we've got some big decisions to make around how we come out of hibernation and rebuild. That diversity of board members creates decision-making challenges, and that's where the independence comes in. So the decisions that are made around the boardroom table and in the owner's shed are the biggest challenges to businesses at the moment.
It's going to be a very interesting 12 months or so, I'd imagine, Scott.
I think it's going to be a fascinating 12 months ahead. I think there's great opportunity with cash rates so cheap, with the availability of money out there from non-bank lenders, from overseas funds, that the entrepreneurial spirit of an Australian business will come to the fore. And I think you'll see some people do some amazing things off the back of the pandemic. And I think it's exciting. I think that we've seen change occur in the last 12 months would otherwise have taken 5 years, 6 years, a decade. And we're going to be a better economy for it.
What a cracking way to start the day on such an upbeat note. Scott, thanks for talking to Fear and Greed.
Thanks, Sean.
That was Scott Langdon, partner in restructuring at KordaMentha. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.